Welcome back, everyone. Next, we have Icon Energy Corp, trades on the NASDAQ under the symbol ICON, and is an international shipping company that provides worldwide seaborne transportation services for dry bulk cargoes via its fleet of ocean-going vessels. Please welcome CEO and Chairwoman Ismini and the CFO, Dennis. Welcome to the conference today. Thank you for joining us.
Thank you, Anna, and good morning, everyone. It's actually a pleasure to be here and having this opportunity to introduce Icon to everyone. My name is Ismini Panagiotidi. As Anna said, I'm the CEO and Chairwoman of the company since inception. Please quickly refer to the next two slides for our forward-looking statements. So Icon is an international shipping company owning and operating ocean-going vessels carrying dry bulk cargoes. By dry bulkers, we mean a ship that carries commodities in bulk, namely iron ore, coal, grains, and the likes, trading worldwide. This way, we support global infrastructure, energy production, and ultimately food supply. Our offices are in Athens, Greece, where we have the opportunity to be talking to you from right now. We trade on the NASDAQ under the symbol ICON. Our mission is to be an agile shipping investment platform that grows opportunistically through multiple vessel acquisitions. So let me give you a few words about myself. I have been in this industry for about 2 decades now. I am what we call a third-generation ship owner, taking over from my grandfather and father. It has always been my intention to get into this line of business. It has been traditionally a very male-dominated industry, but it has been a great challenge for me to step into the footsteps of my family's reputation. I currently now own 15 ships, which is roughly 300 million in assets, with the company that I established a decade ago called Pavimar. It started back then with 3 vessels, and we grew the fleet from there to about 15. I am throughout my career, and through Pavimar, I have bought and sold over 70 vessels and have created this huge world-class organization, which I'm very proud of, and where we own and operate and charter out ships. A bit earlier in my career, I was part of the executive team of a previously initially listed company for about 8 years, whereby I was part of numerous corporate transactions, the highlight of which was a big M&A of over $2 billion. And we did convertible bonds, high-yield bonds, and of course, secondary offerings, and even a SPAC. The rest of the team on our board of directors are 2 independent directors, Spiros, who is the finance guy, and Evangelia, who is the legal corporate governance guy, both of which have deep exposure and understanding of our market, and I believe are very instrumental in our growth strategy. With me here today is Dennis, who for me is the right type of CFO. We're very similarly minded, and I believe he has a critical component to help me take things to the next level by returning capital to our shareholders. He will talk to you about himself a bit later on. Icon today owns 2 ships, the motor vessel Alpha and the motor vessel Bravo. There are 2 fuel-efficient, versatile vessels, 1 Panamax and 1 Kamsarmax, respectively, built in Japan. So for you to get an idea of their size, each ship is about 2 times a football field in length. Both of them are chartered out, contracted long-term, to one of the largest global commodity traders called Glencore, which is a BBB+ rated company. They are enjoying a floating rate with a premium due to their high specs and condition, and both contracts have a conversion option where we can fix the rate on occasions where we see spikes in the market. Finally, it is important for all of us to note here that we have 0 exposure to oil price volatility, as this is a cost that is incurred by our counterparties, our charterers. Pavimar, as I previously mentioned, was founded in 2014, which I'm very proud to say has become a very reputable and integrated commercial and technical manager of ships. So what is its relationship to Icon? Pavimar is the technical and commercial management of all the Icon vessels and will continue to be a service provider for the new Icon vessels coming in. It has managed over 50 vessels in the past and engaged in multiple sell and purchase transactions, as well as fleet acquisitions in the last 10 years, from dry bulkers to containers, as well as tankers. It provides a high-quality service for all the vessels under management, and it currently manages 23 bulkers for us, Icon, as well as others who have trusted us to do so. This is roughly 500 million worth of assets, all of which do enjoy significant economies of scale. Pavimar has been built as a top-tier platform, which we at Icon utilize and build upon as we grow. As we speak, Pavimar has the capacity to absorb immediately another 10 vessels for operations. This will enable Icon to have easy access to high-quality charterers, top-name financial institutions, and overall seaborne transportation participant for its existing and new vessels. As previously said, Icon has been built for growth, and our strategy has been that of growth, from one vessel at our IPO to two a couple of months later, and the contention is to go to 3 to 20 and so on by utilizing a combination of debt and cash flow. Our cash flow, as said before, is being generated by the employment of our vessels, which are currently contracted with a top-class charterer, one of which is up to February 2026 and the other up to November 25, respectively. Accordingly, our chartering strategy will continue to be very opportunistic for the next ships coming in. We shall definitely have a portfolio mixed approach with floating and fixed rates. This way, cash flow is absolutely secure today and in the future, becoming the baseline for our dividend payout, which we wish to build up from as we enter into more acquisitions. These acquisitions will be equally modern, eco-friendly, well-maintained vessels coming from a pipeline of deal flow that we already have access to through our vast experience, relationships in the maritime industry over the years. So we start smaller and grow very quickly with stability and value creation. We're going to be very selective, optimizing our fleet composition, meaning best quality ships at best prices. Again, employing them opportunistically based on market condition at a balanced charter mix, providing cash flow visibility and upside potential. So the model is rather straightforward, and we have been implementing it immediately post our IPO in July, going from 1 to 2 vessels very quickly, and the plan is to go to 3 and so on immediately, as we're going to be doubling and tripling and go on, etc., on our EBITDA. And with that, I would like to pass it on to Dennis to take us through our company's recent milestones, market data, and the financials.
Thank you, Ismini, and hello, everyone. Thanks for being here. I will start by sharing our milestones, followed by an overview of current market conditions and a snapshot of our financials. But first, a brief introduction to my professional background. I have dedicated my entire career to the shipping industry, beginning 15 years ago as an auditor with a Big Four firm. During that time, I specialized in US-listed companies and earned my CPA qualification. I then moved into the industry, where various finance and accounting roles culminated into my current role as a CFO. From that post, I have led over $1 billion worth of transactions, from plain vanilla debt financings to joint ventures, corporate acquisitions, and anything in between. When I met Ismini, I was inspired by her leadership and vision, and I believe she has all the right qualities and ingredients to excel in our industry. And I'm very pleased to be part of this exciting venture alongside her. So, Icon's milestone. Icon was listed on the NASDAQ just 3 months ago. There are thousands and thousands of shipping companies worldwide, and we are thrilled to have joined the club of the selected few with access to capital markets. In fact, Icon's IPO was just the second successful shipping IPO in the past 10 years and the first single vessel IPO ever. Since joining the NASDAQ family, we've implemented a dividend policy to distribute $500,000 in quarterly cash dividends during our first year as a public company. Staying true to that commitment, we paid a dividend of 8 cents per share last month. That's over 50% dividend yield on the prevailing share price. As Ismini mentioned, we are focused on growth through selective vessel acquisitions. In line with this strategy, we successfully acquired a second vessel in September. This vessel has proven attractive to first-class charterers and is already secured under contract through late next year. To finance this acquisition, we used cash on hand and secured a loan facility with a leading international financial institution. Additionally, we negotiated a 75 million upside option at no extra cost to support future expansion. We are thrilled that within a very short period of time, we demonstrated our access to deal flow and the strong support of top-tier charters and financiers. Moving on to the market. Of course, we don't have a crystal ball, but demand for shipping services derives from the demand for the products we carry. These are grains, iron ore, coal, and other commodities that are critical to global infrastructure, energy production, and food security. So as you can imagine, demand is not going away anytime soon. As we speak, fresh economic stimulus measures in China accelerated demand for iron ore, whereas the coming winter months usually lead to increase in coal consumption. On the other hand, grain production in the US and Brazil is hitting record levels, and of course we expect at least part of that to be reflected in increased exports. On the supply side, evolving regulatory landscape and global geopolitical tensions have kept vessel supply growth well below historical averages, resulting in favorable industry fundamentals. As a result, we expect demand to outpace supply in the coming years. There is no doubt that we live in an era of heightened geopolitical tensions. However, shipping remains the backbone of global trade, and historically, uncertain times have created both volatility and opportunities, which is what we aim to capture to generate alpha for our shareholders. Let's now please turn to our income statement. The key components here are the earnings generated by our vessels against the cost to operate. In our industry, these are commonly expressed on a per vessel per day basis. As you see in the bottom part of the slide, daily operating expenses have remained steady over the years at around $5,000. And over the same time, daily earnings average $70,000, driving substantial cash flow generation and dividends to our shareholders. Earnings before interest, tax, depreciation, and amortization have averaged $3.8 million per year over the same time span. During the first half of the year of 2024, daily earnings averaged $14,000 per day, which is up 20% from 2023. Note that what you see here is up to June 2024, meaning that these figures are before the acquisition of our second vessel. As Ismini outlined earlier, both our vessels have secured charters with an investment-grade counterparty expiring late next year or early 2026. This translates to a substantial revenue backlog and gives us a cash flow baseline, which makes us confident that we will be able to execute our dividend policy in parallel to our growth strategy. Two notes here. First, our vessel charters are index-linked, meaning that we are positioned to benefit from potentially rising charter rates. Second, we expect the dividends we pay to qualify for beneficial tax treatment. Let's now move on to our balance sheet. The highlight here is that, as you see, this is a very, very clean balance sheet, which we took advantage of in pursuing the financing of our second vessel. We expect to release the third quarter results in the coming weeks, which will also reflect the acquisition of the second vessel and the borrowings under our new term loan facility. And with that, I would like to pass it back to Ismini for her closing remarks.
Thank you, Dennis. So, what do we have here? We have an industry with robust fundamentals and resilient demand that makes the world go round. A solid and very experienced team, a high-quality platform with a brand name in our sector, and a broad network of relationships, which enhances our ability in sourcing deal flow. We have available liquidity of $75 million through an upsize option at our existing loan facility for further acquisition. We have top quality assets with secured contract revenue to build up from opportunistically. and an established dividend payout policy with a meaningful yield. So in closing, we believe we have all the ingredients to be a very attractive investment opportunity with a growth story for success and value creation for our shareholders. Thank you very much for your attention today.
Thank you.
All right, great presentation. Thank you so much. We do have some questions, starting with Tiffany. She asks, does the fee per cargo vary, or is it priced on container? How does that work?
So basically, we do not carry containers. We have hatches, basically, where we carry bulk commodities. So the fee is on a per day basis, because let's say our Kamsarmaxes and our Panamaxes have a capacity of about 75 to 8,000 tons. So this is the maximum capacity of cargo we can carry. And for this total capacity to be carried, we get a fee on a per day basis. Right now, it's in the region of $14,000, $15,000 per day. So this is the way we contract right now.
Perfect. Thank you for clarifying that. A question from Jemiah asking, how many ships do you have, and are you looking to expand the fleet further?
Yes, we do have 2 ships right now, which is considered on the small side of things, obviously. And yes, there's definitely the intention is to grow. In my previous company that I have created, Pavloma, I started with 3 in 2014 and built it up to 15 and 22 eventually. So here we have the same kind of mindset in Icon to build the fleet, depending on market conditions, and when we see a bit of fluctuations in pricings, to go and opportunistically buy new ships.
And Evan asks, what capacity are your ships sailing at, if you can give an average?
Capacity in terms of utilization, we are, they're 99% utilized, so 365, days per year, basically.
And Sean asks, when you say you're not subject to oil prices due to the fact that it's paid by your charters, is that the business model, to charter the vessel and not have individual shipping clients combined on the ship? If you can explain that.
So basically, our client is a charterer. So they contract us, is like you lease a house. So they contract us to carry their cargo. Okay, so we carry their cargo and they're responsible for the expenses. And the expense is the oil, basically, that we are going to be burning to perform the trip from A to B.
And another clarification here, Anna, is that because you mentioned if we combine multiple clients, this is mostly the containers business. So on the dry bulk side, 99.9% of the times, the entire ship and the entire cargo belongs to one client.
We have one counterparty. Now, if they have subsold parts of the cargo to others, we don't know, and it's not something that we, really care.
We're not exposed to that at all.
And Kyle asks, how do you acquire your ships? Are you commissioning them to be built, or are you buying resale? Where do you get them?
Right now, the 2 ships we have bought, we have bought in the secondary market. So they were trading vessels out there. We have bought from other counterparties in the business. We haven't contracted any new buildings right now. If we were to go out and contract a new ship, we would get delivery of it in 2027, the earliest. And because we want to have cash flow visibility and grow the company a bit faster, we want assets that come in right now and start operating and providing cash flows quickly. We feel that if we get to a substantial size of 10 or 15 vessels, then it would make sense for us to go out and make some new building contracts with future deliveries.
And Ricardo asks if he's to understand that your gross margins are 30%. Is your fuel expenses, is that below the line or not relevant at all?
Not relevant at all.
And gross margins are 30%?
Basically, our expenses right now is, as we said before, we are contracting our ship on a per day basis, let's say $15,000 per day. And our expenses are operational expenses, which include crew cost, insurance, spares, some services for the engines and the machinery that we have on board. These are the headline figures. And in total, they come up to $5,000 per day. So the 10,000 is our bottom line.
And
this is very, rounded numbers.
Yeah, as for the gross profit calculation, this is actually a very good question, because here is something very specific to the shipping industry. The usual way of calculation of the gross profit margin, which is the revenues and the cost of goods sold, it is not really applicable here, because, as Ismini explained earlier, the way we charter our vessels, basically we charter the vessels to first-class counterparties, and they take care of substantially all the cost of those goods. So we don't really have any variable cost element underlying our revenue line. So in that sense, the gross profit margin is like saying 100%, which would not be meaningful. So yeah, this is something very specific to the shipping industry. That basically what you see as revenue, it is net of all expenses that are paid by the charters, including, as we discussed before, the oil and the fuel consumption.
Brett asks, what dry bulk elements might you carry that support the alternative fuel industry?
The commodities that we carry are a bit, basic. They are the basic for infrastructure and construction worldwide. Now, there's a huge movement in our industry for alternative fuels. Not in our vessels, we do not carry them because they're not built that way. They're built to carry different commodities. There are other vessels like that's called LNGs, etc., that carry those types of alternative fuels. But the intention is for our ships to eventually start burning those fuels. And there's new regulatory environment that we have to comply with in the next few years, whereby we will be, switching from traditional fuels to alternative fuels and fuel-efficient products.
Which is, by the way, something that has benefited the supply dynamics a lot, meaning that because there is a lot of uncertainty around the, what the industry calls fuel of the future, right? There's a lot of uncertainty around that, which have kept ship owners from ordering new building vessels. This means that we are now in a fundamentally underinvested industry, which has created some, positive demand and supply fundamentals.
And we have a follow-up question from Brett. In a crowded dry bulk market, how can you differentiate yourself? With scale, won't you suffer from the same issues as more established players? How do you address that?
We believe that there's room for everyone right now. It depends on the positioning that you have. We are not that much levered. As Dennis said before, we believe there is demand for our commodities, and the fundamentals are robust. The supply of ships has been coming down. There hasn't been that many orders over the last couple of years. And especially, since everyone is expecting all these new regulations to come into play, people are more hesitant. That is why we have been benefiting from the market fundamentals. So we don't feel it's a saturated market. And definitely, our story is a growth story as well. So, there's capacity to grow and firepower to grow.
And with that said, given you are in a growth stage, why are you offering a 15% yield rather than reinvesting it into the business? Asks Brett.
You're absolutely right. And that is one of the differentiating factors we're trying to pursue from our peers. Because we feel that a lot of our peers are not valued properly. And we feel that because they're lacking this type of yield, that we will be getting a better valuation because of that.
We have a question from Ada asking, what impact does the location of the ships have on them being chartered? And what is the cost to get them to a location, basically to deliver an empty ship to where it should originate its journey? Talk a little bit about that.
So basically, we have certain journeys. Let's say we trade globally, and a very popular route is China, South America, and you know, and vice versa. So basically, wherever we offload the cargo, we make sure that our next contract starts from that specific location. So the whole fee is taking into account any relocation that we might need to be doing, because they know that the availability of ships are in a certain location, and whenever they need to charter, if they want, they will have to relocate it at their expense. So the whole, you know, price is taking into account any, you know, relocation that the vessel might need to do. But nevertheless, for us, it's we're chartered from A to B, then we start again from B to go to another area.
And Timios asks if you intend to do another share capital increase in order to grow the fleet faster.
It is not in the plans right now. We believe we have the firepower to grow the fleet as we are. So we just entered the market. So we just want to see and feel how things go, and give it some time.
Wonderful. Well, do you have any closing remarks for our viewers today?
You know, it's a very exciting industry. It's a global industry that is up and running 24 hours a day. There's no holidays or weekends. So, you know, for me, it's a really passionate industry to be in. And, you know, I would encourage everyone to have a bit of a closer look at it.
Wonderful. And a very necessary industry at that. We appreciate you guys coming on to the conference, and we would love to follow along with your journey with some future updates.
Thank you for having us.
Thank you so much.
All right. Thank you both.
Bye.
Everyone stay with us. We'll be right back with our next presenter.
Thank you.